Hey everyone and welcome to ReadIT. With all the Reddit vs stock stuff going on, I decided to make a r/AskReddit video. With the question, Brokers of Reddit, how crazy is it where you work / on the trade floor right now? My wife works for TDA and she says the phone calls are 700 deep with hours-long wait times. I tried to call for a not stock-related reason today. I was trying to set up a login for an existing account, and the hold time was over an hour. I decided it could wait a day or two. So long story short, big hedge funds and some people were shorting GME and AMC to an extreme degree. Shorting is when you borrow a stock from a broker or other people and sell it hoping it then falls in price so you can buy it back cheaper than you sold, return the stock and pocket the difference. Well, it turns out GameStop in particular were shorted around 135%, so more short seller than stocks even available. So when investors rallied and started to push the stock up in price, it caused many of those people who shorted it to start buying back at a loss, which drove the price even further up, and most of those shorts were big institutional investors. This type of situation is called a short squeeze. Many people are still holding short positions so that squeeze could continue. Some claim it hasn't even started. On top of that, a gamma squeeze was also responsible. Many institutions also had sold calls that were out of the money originally but now are in the money, and they need to cover those calls, which means they need to buy up shares to cover, which in turn drives the prices higher yet again, putting more and more calls in the money as it goes up. Because the hedge funds were overexposed in their position, they're now losing billions of dollars and are trying to manipulate the retail investors by restricting trades and some other shitty methods. Hope this explanation helped. I would also like to jump in and say, as far as I'm aware, the trade floor craziness that is portrayed in the movies is really not a thing anymore. Most brokers just sit at computers and make phone calls and trade via computer, etc. I know there's still a couple futures markets that have screaming, yelling, etc., but that's all kind of a bygone era. Maybe I'm wrong, but as much as I'm sure people envision people yelling by GME 154, I don't even think that would be a thing anymore. Retail sales at a broker-dealer. It's been busier these last few days. With RH suspending GME and various other day tickers, my inbox and voicemail has been a flood of "Do you guys offer GME?" Worked from 7 a.m. to 10 yesterday to try and keep up with it. What's more interesting is how this is making its way outside of the retail trader circle. My mother asked me to explain how a short position works yesterday. My phone has been blowing up with friends and family asking for my take on what's going on. A lot of people learning the basics of trading overnight, which is a good and bad thing. I'll leave the comment here because I'm a bit mentally taxed, but I feel like I have front row seats to a historic market event. Trading floors don't exist anymore, at least not like you've seen them in movies. Those scenes of guys answering phones were people answering client calls to buy/sell stock. That is all but extinct. Any institutional investors with proprietary trading do so almost exclusively with models. If anyone left in finance is moving large amounts of stocks by their gut, it's because the power is so consolidated in one individual that there's no hectic scenes of papers flying and guys screaming around them. And they are most likely doing it on a computer screen. Trading floors nowadays look like cubicles sectioned into teams that contribute specific things. Most communication is done via Slack, and it's actually a pretty somber scene in times like these. It's just a bunch of stressed out people looking at screens. But again, even that hardly exists anymore. The scene of the most erratic hedge fund intimately trading in GameStop right now is probably 3 dudes crouched around a screen stewing and staring at a model. I work for one of the largest firms as a broker. Our hold times are longer than normal, back to 2 hours at most, similar to April/May of 2020. Around half the portfolios I saw today had some meme stock in them. I've also received way more calls from people in their late 20s than usual. They usually need less tech support, etc. Our company has restricted many stocks from being bought on margin/writing covered calls W/new shares purchased. Tons of new accounts. And there's a feeling of sticking it to the man, and that the stock market is just gambling. Edit. Also, a lot of people shitting on Robinhood, which I find funny. Happy to answer any questions. I'm basically underpaid call center support. Hedge fund manager. Wednesday was wild. Our P&L shot massively negative, flipped by noon to be massively positive and ended small down. We don't even trade GameStop, but the shock to the stock is definitely seeping into other positions. Overall, we are delighted that POINT72 and possibly Citadel have lost money. We don't buy into the BS that the markets were manipulated in Citadel's favor, but RH not fulfilling its role as a broker is a huge red flag and indicates their precarious financial viability. Tomorrow will be fun, but we expect February to be the real party. EDIT2. Lot of talk about hedge funds being scared, or some that believe nothing has changed. From our angle, nothing has changed in how we do business. We trade biotechs. Forex on FDA announcement on a short position intraday is part of the business. That said, more volume in trading is good for us. Folks like Icon have used the press for years to signal positioning and benefited. The fact that retail investors are doing so is no different. The thornier issue is for Reddit/mod/SEC. How do you ensure that the posts are not being used for pump and dumps? How do you ensure that boiler room brokers aren't using the boards to market securities? Being a mod of WSB is a huge personal liability, an unpaid position where you are accountable for content and have the SEC sniffing your ass. I was a trader, though in credit, not equities, stocks. I do sway/quant stuff now, but I have been chatting with a friend of mine who's a cash shares trader. So probably the closest thing to what you imagine when you say a broker. Apparently it's relatively chill. There's not much liquidity in these stocks, GME/ETL, and so the consumer retail trader, there's only one nowadays, is pretty stressed about it, but nothing absurd. The rest of the guys don't trade these names, so nothing really out of the norm for them. March 2020, i.e. when COVID blew us up, was much crazier in my memory. Though I am on a different floor than equities where that stuff matters more. As others have pointed out, brokers don't really exist anymore. Trade floors do exist, but exchange floors, i.e. the floor of NYSE, are mostly a TV studio. Happy to answer questions if people have them. And here is the last one for today. Hope that clears things up for some people of what's going on. Please throw a like at me and subscribe. I post Reddit videos daily. I don't work on the trading floor, but I'm an attorney who services a variety of financial institutions, including brokers/dealers. This isn't the exciting, hilarious answer you want, but a lot of people had no idea it was even happening until the past 48 hours, and even now, it's mostly just a funny news article about some internet trolls making a bubble. This is a big deal to the shorting community, but to the other 99% of the financial world, nobody gives a shit. As much as young people on the internet like to imagine this as an epic, David vs Goliath, Wall Street vs Main Street showdown for the history books, from a bird's eye view it's actually just a brief dumpster fire where a couple hedge funds lost their shirts betting on one little small cap stock. It has happened before, and it will happen again. In 6 months, nobody will remember or care, except that, maybe, it will become more difficult for retail investors to trade options. And not because the greedy hedge fund oligarchs forced the SEC to crack down on retail investors. But rather because, when this is all said and done, there is going to be a black hole where most of these retail investors' brokerage accounts used to be, and the SEC and brokerage community will be lambasted for failing to protect unsophisticated investors from a bubble. I have been monitoring the WSB threads, and while the WSB veterans know that they are making a suicide charge for the memes, they have brought thousands of naive, new investors with them, who predominantly think that they are going to somehow come out on top, not realizing that they are cannon fodder for the more savvy WSB users to exit with gains. Redditors never seem to stop and think about why the WSB guys know so much about derivatives trading, or how they seem to know how to access and read from a Bloomberg terminal, or why there are so many users there that can seemingly drop tens or hundreds of thousands of dollars on complicated meme plays. How do you think that WSB knew that GME was open to a short squeeze and a gamma squeeze play? WSB's power users are younger finance brothers. It's 30-something investment bankers and portfolio managers miming with each other and cosplaying as autists. If you didn't know what a gamma squeeze was 48 hours ago, You are their exit strategy and the down payment on their next Porsche.